I knew I wanted to get into trading. I think I was probably like 16. You know, you get to do those career days where you job shadow. And I actually job shadowed a lawyer. And I realized very quickly it's not what I wanted to do. I mean, the spec side is like, there's an energy to it. There's always a part of me that was like, oh, at some point I do want to go back to the spec side. But Tourmaline kind of offered the best of both worlds in the sense that like, we're not speculative, obviously. We're managing a huge asset. We're portfolio managers. But I get to be involved in the market on a daily basis. Tourmaline runs pretty lean. It's funny, like if you didn't know Tourmaline and you walked into our office, I don't think you'd ever be like, this is a $25 billion market cap company. I mean that in the best way possible. It's a humble operation, I guess I'd say. But when you're managing a 2.7 BCF a day book across like well, I guess if you include oil and liquids, 14, 15 people, it's pretty lean.
For this episode of Energy Untold, I was joined by Brendan Farris. So if you've been waiting for an actual energy trading episode, we're finally here. Somebody who's in the market, has been in the market for quite a while, knows the market. This is the episode for you. He's a senior marketer at Tourmaline, very active in the space. We go through his career at TransAlta initially, and then now at Tourmaline. I just really enjoyed this conversation. I think anybody who's interested in trading, how it feels, how it works, is going to be into this. So I hope you enjoy this conversation. So I thought a good place to start would be actually when did you actually first become aware of energy trading, just as a career?
The moment I applied at TransAlta. But I will say, I knew I wanted to get
into during the application process? Or?
Yeah. I mean, I was so naive as far as electricity trading was concerned.
Yeah.
It's kind of a black box. I don't think there's a lot of coverage of it outside of like working in the industry.
Yeah.
But, you know.
Maybe changing now, but.
Yeah, you get a bit naive, or you flick on a light switch and you just expect the light to turn on.
Yeah.
And you don't really question where it's coming from. And I feel like that's true for a lot of things, like, you know, where's our food coming from? Where's our energy coming from? Even on the tech side.
Yeah.
But I knew I wanted to get into trading. I think I was probably like 16.
Okay.
And it was, you know, you get to do those career days where you job shadow.
Yeah.
And I actually job shadowed a lawyer. And I realized very quickly it's not what I wanted to do. I don't think I have the ability to sit there and read through documents. I'm too maybe ADHD for that.
Yeah.
But during that, I went with my dad to visit his wealth advisor. And I just found that super fascinating.
Okay.
And then from there, I went to university in the UK, and the program was basically geared towards sending you up for a job in trading or capital markets. I think the school was actually funded by JP Morgan.
Okay.
And so that kind of like set me on the path, really. And then from there, you know, it was a lot of applications in the UK because I graduated in 2008.
Yeah.
So a tough time to graduate,
Yep.
especially in the UK, because I think London got hit even harder than a lot of other like big financial hubs.
Yeah.
So I probably...
And then did you move back here after that?
Yeah. So I graduated in 2008, and then I worked in the Channel Islands for a summer at RBC Wealth Management,
Mm-hmm.
and then I realized it was going to be tough to get a job.
Yeah.
So I applied for my master's at King's College in
Yeah.
London. And the first day at King's, we went out for a drink in Canary Wharf, and that was the day Lehman went bust. And I think their offices were there because you could see people like carrying boxes out.
Yeah.
So I was like, oh, maybe this was a good decision to take a year. And in that year, at that time, my plan was to stay in London. Like,
Yeah.
I wanted to get a job in trading. I didn't know where exactly, but I knew that's where I wanted to be.
Yeah.
And I probably, like, not an exaggeration, applied to like 100 different places.
Yeah.
So I got really comfortable with rejection. And then I came back here, worked at Nevada Bob's for a bit.
Okay. Yeah.
And then I applied at TransAlta.
Yeah.
And even I actually didn't get accepted there right away.
Yeah.
But I knew someone in HR, and I just asked them, hey, could you just like see where I stand on this application?
Yeah.
And apparently they kind of were looking over me because of my master's degree and thinking that I would want to get paid more.
Oh, geez.
And I was
Okay.
like, well, I'm getting paid $12 an hour at Nevada Bob. So if you pay me $13, I'll probably start tomorrow.
And who was the person that really first identified your talent for trading?
I don't know, really. Like, there are a lot of really great people I work with at TransAlta.
Yeah.
When I started there, Dean was the VP. I got to work with him a little bit. And then a couple years later, I mean, it was very quick, I guess, my ramp up at TransAlta. I think maybe I had the fortune of some decent timing.
Yeah.
Because I started in May 2010, kind of Pac Northwest Analytics.
Yeah.
And then I moved to the Alberta Power Desk.
Yeah.
Which wasn't really I was in the graduate program. This wasn't really a graduate rotation, but they had some changes on the analytics side. They were moving people around.
Mm-hmm.
So they kind of thought, oh, let's give Brendan this job,
Mm-hmm.
which was a pretty transformative time for ASO Power, because that was when they kind of introduced the economic withholding.
Yeah.
After I'm pretty sure it was like October 2010, they just had like a decade low power price settle.
Mm-hmm.
And they were, because it's an energy only market, as we've talked about, really the only way to incent generation is through the forward curve. And they were concerned that where they saw demand going was not supported by the forward curve. So the MSA, I guess, came up with this structure.
Yeah.
So then you had a couple of guys come over from New York at Goldman and Barclays, start working there. I got to work alongside them.
Mm-hmm.
Blaine, who was the term trader on the power side, then I got to work closely with him. So, I mean, I don't know if there was ever a point where like, oh, this guy's good at what he does. I was just willing to just, get to work.
Yeah.
And I was just fortunate enough to work with some really smart people.
At what point did you get your own book?
That would have been, so then I moved to asset optimization, and then I moved to gas.
Okay.
Gas would have been late 2011, and then we had some structural changes on the gas desk.
Yeah.
So I was an analyst, and then I kind of got thrown into a term trading role, working alongside. Yeah, that was a big step up. But I think sometimes there's like a positive to like youthful ignorance. I didn't really realize exactly like what I was getting into,
Yeah.
but I knew I wanted to trade. So that was probably late 2012.
Okay.
So I was working alongside Blake. We changed the structure of the desk. It was a financial desk,
Yeah.
and we kind of went back to basics. Like let's build a physical desk.
Yeah.
So we picked up some pipe capacity, California. Picked up some storage in Alberta.
Yeah.
Some Eastgate pipe as well.
Yeah.
2012 would have been I started trading.
And then can you pinpoint kind of the moment where you thought, okay, I have a sustainable skill here? Was there like a particular trade, a particular strategy?
I was thinking about this. I feel like I remember more of my losses than my wins. Maybe that's a bad sign for me as a trader. But I think also you just remember like the mistakes you made.
Yeah.
I remember one trade in particular, which would have been 2013. So we had storage position in Alberta.
Yeah.
And we managed it as like any marketer would, kind of lock in the value of the spread.
Yeah.
And then it was like November 2013. There was really no weather showing up.
Yeah.
And those spreads collapsed. Like the March, April traded flat. And the market was basically paying me to buy back my winter hedges, roll it
Mm-hmm.
to either the following summer or winter. And then anyone in the energy space knows what 2013-14 winter was,
Yeah.
right? We withdrew like 3 TCF from storage in the lower 48. And prices just ballooned. And
Yeah.
we were unhedged at that time, at least in the winter period.
Yeah.
And ACO started trading like $25.
Yeah.
So I remember that specifically because it was a cool moment. Obviously, we did really well in the position.
Yeah.
But then also, like, it was just using what the market was providing you. It wasn't like we were taking excessive risk by any means. It was no risk. We were basically doing what the market was telling any storage operator to do.
Yeah.
So that's a specific one that stands out to me.
Yeah.
And then it was a lot of base hits at TransAlta, I think.
Right.
I was
Just like the accumulation of those, it's like, okay, I think I've got something here.
Yeah. And I like the idea that we started growing the physical side out, because then you can trade out the physical asset.
Mm-hmm.
I mean, TransAlta is obviously utility, so they have the power side. But the gas side is kind of siloed a little bit.
Yeah.
So we had to get a bit more creative. We did a lot of analytics because that was, in a way, a strategic advantage for us.
Yeah.
A lot of smart people on that desk, so as well on the power side. So we utilized all those resources.
Yeah.
And I think we built like a really good analytical framework
Mm-hmm.
that we could leverage, and then the physical side as well.
Yeah.
So it's some good years there. I mean, I love my time there. It was a blast.
And what was the catalyst to leave and to join Tourmaline?
The desk like started changing a little bit, I guess, and it was just really great timing, to be honest. Tourmaline, so it was a headhunter that reached out to me. I did not know it was Tourmaline.
Okay.
And And it was just at the time of my career where I was willing to explore another opportunity.
Yeah.
And then I found out it was Tourmaline like a few interviews in where I met with Rick and Shara. And they were building out their California book. I think at that time they had $100 million of transport down to California. And California was kind of like my area at TransAlta.
Yeah.
And I think they were keen on that. And then they were keen on building out an analytical framework at Tourmaline. And so it was just a natural fit.
Yeah.
And I'll admit, I was such like in an echo chamber in TransAlta. I wasn't following E&Ps really closely in the city. So I didn't know a lot about Tourmaline, which would be shocking to a lot of people because, I mean, their reputation kind of precedes themselves.
Yeah.
But it was a friend of mine where he was at Peters.
So it was a little bit different at that
It was different.
Yeah.
I mean, we've really grown significantly in the last like 7-8 years. But I think anyone in the E&P space, you know the name Mike Rose, you know his companies, Berkeley, Duvernay, and Tourmaline.
Yeah.
But I was speaking to a friend at Peters & Co. about the opportunity. He's like, you have to go. Like, that's the best management team in the city.
Yeah.
So that was kind of one of the deciding factors. And then obviously the role really appealed to me as well.
At that time, are you still thinking, okay, I'll just be here for a little while and then I still want to do spec, or?
It's definitely in the back of my head for a bit. Because I think, I mean, the spec side is, like there's an energy to it. And so there's always a part of me that was like, oh, at some point I do want to go back to the spec side.
Yeah.
But Tourmaline kind of offered the best of both worlds in the sense that like we're not speculative, obviously. We're managing a huge asset. We're portfolio managers.
Yeah.
But I get to be involved in the market on a daily basis.
Yeah.
I get to do all the analytics that I was doing at TransAlta and kind of use that to fit our profile and where we want to, like what markets we want to look into. And the culture is phenomenal. So yeah, there's came a point, it's probably 3-4 years in where I'm like, no, I think this is going to be a longer term thing.
And what do you think are the kind of 2 or 3 things that really differentiate Tourmaline from, I guess, the others in the space?
Yeah, I mean, I've never worked in another E&P, but from what I've heard, chatting with other people, I guess, I think what benefits Tourmaline for sure is on the marketing side, we have full buy-in at the top, right? Like I think Mike and Brian were early adopters of the value of marketing at an E&P.
Yeah.
So
and keeping that in-house.
And keeping it in-house, that's true too. Yeah, we don't really do like AMAs per se, things like that. We'd like to manage all of our transport. So that's huge. That kind of enables us to pursue opportunities. We can bring ideas to him. I think he really trusts the team too. Yeah. So, I mean, when you're bringing an idea to him, you better believe in it too, because there's a chance he's like, yeah, I like that too. Yeah. And then I think one big thing that I've noticed is flat business structure. Like, there's not a lot of layers at Tourmaline, right? Like, there's like myself and a group of other traders, marketers. Then you go like Cher's the VP, and then you go to Mike. And Mike's like pretty hands-on. He likes to know what's going on. He's interested in it, so he's down frequently.
He just like has a natural curiosity.
Yeah, I think he's always been super interested in the marketing side. I mean, he's interested in every group. Yeah. But like he will, if he's in town, not traveling for work, he's on the marketing floor 3, 4, 5 times a week. Right. He'll just poke his head in your office, like what's going on the cash side short term, or if we're working any like longer term hedges. So I think the fact that we're super flat, it allows us to move quickly on ideas.
I was curious about that, right? Like, so the management team is just open to new ideas, new opportunities.
Yeah, within reason, for sure.
How quick can you turn something around, right?
I guess it depends what it is, really. I mean, obviously, we do a lot of due diligence, especially on like some of our longer term deals that we've done, like our Cheniere deal. On the hedging side, we can move very quickly, I would say. It's a conversation with the team, Shara. We have a view, and then it's a quick email to Mike and Brian, and they respond pretty quickly. So I think that helps, especially this year. You look at where AECO settled this summer, like we settled 90 cents cap per GJ. That's a challenging price environment for anybody. But we kind of saw this, like the writing on the wall. And I don't think we were unique in this. I think a lot of people saw this in 2022. When, cash was like $7 at the hub. But the curve was bid as a result. So 2024 AECO was trading $4. And we were doing our modeling, and we kind of saw that 2024 didn't maybe look as good as what the forward curve thought it would.
Mm-hmm.
And so we did a lot of hedges back in 2022, 2023.
Yeah.
And you can see that in our the investor side of our website, our hedge report. You know, we hedged like a BCF a day, around $4 cap or GJ.
Yeah.
So, you know, that value is pretty significant. And then, you know, 2025, you can see we're also hedged like a BCF a day. I think we're 19% exposed to AECO in 2025.
Right. And what's the vibe like at the office when a hedge goes against you? Is it just like, oh, that's lost opportunity cost, or we got this wrong, or you know what I mean?
Yeah, I mean, I don't feel good about it, especially coming from a true, like, more speculative trade floor.
Yeah.
I still build my hedge book like I built it at TransAlta, like a mark-to-market component.
Yeah.
Like I remember we had a view back in like 2018 that with the growth in LNG, that the hub would be the premium market in North America, which stood true for most markets, but not for California.
Yeah.
So we made some calls on basis in California.
Yeah.
That ended up working against us. And so I think I feel it more than anyone else does. I think Mike's really receptive to, you know, if I'm talking about JKM, for example, back in 2022, the 2023 summer curve was $40, right? And that's when our deal started.
Mm-hmm.
And then it went up to like $60, so like $20 in our face.
Yeah.
But in Mike's world, like, you know, $40, that price goes around for Tourmaline, like looking at our operating costs.
Yeah.
So he's like, that's a great price.
Yeah.
And then, you know, hindsight's 2020, 2023 curve settled like $19, or no, maybe $15.
Mm-hmm.
So because we're a huge E&P, like we can leverage a lot of different components to our business. We have a strong balance sheet, investment grade. So I think that helps a lot on the marketing side as well.
To wheel through some of that stuff, yeah.
Yeah, for sure.
Yeah. And I guess, like describe a little bit more the kind of just marketing and hedging philosophy. So you mentioned 19% for was it going to next year?
Cal 25. Yeah, for summer we were 9%. We were 32% hedged for our total gas position in 2025. Mm-hmm. We're 19% exposed to AECO.
Yeah.
Then we have all of our diversification.
Right.
And then this year we were 9% exposed to AECO and like 38% hedged. It's all in our investor deck.
Right. So it'd be so through some combination of hedges, transport deals, anything else?
We have some alternative commodity exposure. Like we did some gas to power deals in Alberta, which worked out pretty well. Yeah. But a bulk of it is definitely our geographic diversification for sure. We have some storage assets too. Yeah. Down in California and in Ontario. Yeah. But yeah, at the end of this year, again, this is in our deck. Have 1.3 BCF a day of egress. Yeah. So like 550 million out Westgate. Yeah. 350 down to Mid-Con and to the Gulf for our LNG deals. Yeah. And then another 300 to Dawn. Yeah. And then like 80 million of T-South to Sumas. Right. So a lot of diversification.
Yeah. And like, how big is the team? How big is the marketing team?
Not big. We're pretty lean. I think Tourmaline runs pretty lean. Yeah. It's funny, like if you didn't know Tourmaline and you walked into our office, I don't think you'd ever be like, this is a $25 billion market cap company. And I mean that in the best way possible. Right. Because it's a humble operation, I guess I'd say. Yeah. But on the gas side, we have like 5 marketers, traders, and then we have a couple like analysts, mid-office, then Sheriff's VP who runs the group. Yeah. And then the oil and liquid side, we have another like 5 or 6 people. We've acquired some people through acquisition. Yeah. But when you're managing a 2.7 BCF a day book across like 7. Well, I guess if you include oil and liquids, 14, 15 people, it's pretty lean. Yeah. I remember at TransAlta, I had 2 a day of redwood capacity. And we were just trying to like get exposure to that market. And now we send half a BCF a day out the Westgate. And like, I guess I just manage that. Yeah, yeah.
Wow. So I was asking a friend recently in the space what inning he thought the Permian was in. And he said it's been in the 7th for 3 innings now.
Okay.
What inning do you think the Montney's in?
Well, this is a Mike quote. I think Mike always quotes, we're in the second inning.
Second inning, okay.
And this is a stat from Farris, like an external provider. They say we have the largest drilling inventory in North America. So we have 75 years of drilling inventory and 20 years of tier one. And I think the tier one is big. I think you look at some of the other like lower 48 basins. And they might be, again, who knows if this is going to play out like this, but their tier one inventory is anywhere from like 7 to 12 years. So what does that mean for the economics when you start dipping into your tier two inventory? Especially like kind of Haynesville, it's kind of viewed as your like marginal molecule these days, especially with all the LNG down there. A drier place, their break-evens are higher. So what does that mean for pricing out the curve? And if it does mean appreciation, then I think that works out well for Tourmaline because we're not only the biggest gas producer in Canada, I think we're fourth biggest in North America, but lowest cost operator.
I was going to say, like, where do you think you rank globally?
I don't know that. Yeah, because then I guess you got like the mega caps. I know we're the fourth biggest gas-focused producer in North America.
But sorry, I meant by like by cost. Like
I'd say we're very competitive. I mean, you probably need to pull in someone from the operations side to give a better number. But I would say we're one of the best. I mean, if you look at like, I know our numbers, like we have something like, I think 22,000 locations, but 1,400 of those break even at zero or less than zero, assuming $65 WTI because of our liquids uptick. But our like drier plays are even breaking even at 250 cap or GJ. So you have the FX uptick too. But we cover our maintenance and our dividend at $1.50 US per MM. I don't know a lot of other plays that are valuable at that level.
And then you guys do not have any LNG Canada deal, right?
No.
And you must have looked at it. So what was the process there?
I mean, we signed the Cheniere deal. We were obviously the first Canadian producer to do an LNG deal. Maybe unorthodox that we went all the way to the Gulf. But the timing of that deal, we really liked an earlier start date. We started in 2023. So like we're always looking at, I mean, another benefit of being at Tourmaline is you get a lot of deals come across, or a lot of opportunities come across the desk. And then we're just making a call on the ones that we think fit our portfolio best and that we think have the most constructive long-term story. And we really love the Cheniere deal.
How many years is that?
15.
15, okay.
Yeah, and then we have...
So there were not a lot of producers that could take that long-term view, right?
Yeah. Going back to like how I mentioned that Mike and Brian early adopters of the benefits of marketing. I think they also saw the writing on the wall, like this obviously predates me, that to be economic in this new space, you need to get big, you need to get big fast for economies of scale, but then also to be able to bid on these longer term marketing deals. Because you're seeing some deals on pipes, like I think T-South, there was some capacity that went out for like 70 years or something like that. So the typical LNG deal, like these long-term ones are 15 years. And then if you look at the value of that deal, like a lot of that value was front-loaded, 23 to 26. The curve is very strong. Obviously, the back end of this decade is where you see a lot of LNG hitting the market. So the forward curve is naturally depressed because of that. But we released this in our Q1 numbers. I think the first year of that deal and then Q1 of this year, we realized $650 million over AECO Hub. Including our hedging. So that was a big reason why we liked that deal. We wanted to get gas to market.
And there's nobody else in the basin really that has a similar deal, right?
ARC does.
ARC does?
Yeah, ARC has ARC has more LNG volume than we do currently. They acquired some Alliance Transport on their 7G acquisition. So I think they might have 2 LNG deals with Cheniere, and then they have a deal with Cedar. So yeah, hopefully going forward, there's a lot more opportunities that pop up on the West Coast, and we'll look at all of them.
What do you think happens with like LNG Canada capacity in the future? Is this it? You know, we come online halfway through 2025 and that's it, or do we think it gets expanded over time?
I mean, I think the economics makes sense to expand it. Shell's been kind of quiet on phase 2.
Yeah.
Maybe they want to wait and see what happens this time next year in the election.
Yeah.
I mean, I hope it goes forward. You have like those two projects, whether it be 4 BCF a day, potential for that Rockies LNG project, Cedars going forward, wood fiber, that's like 6.6 BCF a day of capacity on the West Coast.
Mm-hmm.
That's a huge increase in our demand. And at this point, kind of like it's tougher to put pipe in the ground, right?
Yep.
So a lot of these pipelines are Eastgate or Westgate, they're basically fully utilized at this point.
Mm-hmm.
So I think West Coast LNG provides like a great opportunity for the basin,
Yeah.
hopefully for the country too.
Yeah. Yeah.
So I'm hopeful.
Hopeful. Okay. Cautiously optimistic.
Yeah.
At what point do you think the just U.S. LNG in general has a more material impact on North American prices?
I mean, you kind of are already seeing it. We're so like globally integrated now.
Yeah.
You saw it back in 2020 where on the reverse side of things, we saw LNG shut-ins
Mm-hmm.
with the oversupply in Europe and Asia. And then in 2022, I feel like there was part of the pricing in the lower 48 was on the potential risk that we would have to shut in LNG. I think even Biden came out and said something along the lines of like, for energy security, there's we might have to curtail LNG flows.
Mm-hmm.
So, I mean, then you're pricing at that point JKM and TTF for like $45.
Yeah.
We obviously didn't get that high, but I think we're already seeing it, and it's a huge percentage of our demand. Like we're like 13 BCF a day. We're growing to like 25 to 30 BCF a day by the end of this decade. That includes Canada and Mexico.
Yeah.
But, you're talking 20, 25% of your demand.
Yeah.
Like it's going to have real impacts for sure.
Yeah. And it's, do you think that the timing of how it's hitting the curve is about right? Or I guess you're just constantly monitoring that?
Yeah. Yeah. I mean, I think it's fair. It's like 28, 29. It's like 850. I think that makes sense. There's a lot of gas hitting the market, not just from North America.
Yeah.
Middle East as well.
Yeah.
We'll see how it plays out. Like the demand story in Asia is always a bit of a question mark.
Yeah.
I mean, the big story, the LNG trucking story is pretty big right now. Some external providers have huge demand growth in Asia, whether you believe that or not.
Right.
Like 35, 40 BCF a day by 2035. So, yeah, it just depends if you can keep pace. I mean, obviously in Asia, they're still a heavy consumer of coal.
Mm-hmm.
And so the story that we like at Tourmaline, and I think like in Canada in general, is, we move more gas molecules to Asia over the long term. You'd hope that
displaces the coal.
You'd hope so.
Yeah.
I mean, they're obviously have had huge renewable growth too.
Yeah.
But you know this better than me on the power side. I feel like coal is more of a base load, and you kind of need some intermittent, or you need some kind of peaking generation options when you have a big renewable portfolio.
Yep. It's necessary to smooth out the curves. It's it's the only way.
Yeah.
Yeah. I wanted to get into a little bit of what your daily routine looks like, actually. So, you sit down in the morning, fire up your computer. What are you looking at?
Yeah, I mean, the first thing I do in the morning is like have a look at NYMEX price when I wake up, just to see that's probably PTSD from TransAlta. As positions move against me at 3 a.m, and I went into the office. And so I always like to see what happened overnight, especially right now.
Yeah.
You look at the weather patterns, how they changed overnight.
Yeah.
We obviously have exposure to Asia and Europe now, so when you come in, you get some updates on what happened overseas overnight.
Mm-hmm.
And then I manage the West U.S. portfolio in cash.
Mm-hmm.
So I trade out that portfolio, which is PG&E, Malin, with some SoCal exposure. And then after that, it's kind of variable, I guess.
Yeah.
Like I said, we do a lot of analytics in-house.
Yeah.
So whether we're updating models or looking at new ideas of how to look at the market and building that out.
Yeah.
And then a lot of strategy sessions, basically, on opportunities that we are looking at. Because we're always, with Mike's always about, if we're not gonna grow our production into an oversupplied market,
Mm-hmm.
and naturally we'd like to grow our production that's lined up with egress.
Yeah.
So our job is to find that
egress, whatever that looks like.
Yeah, and we want to find egress in markets that have a constructive demand story.
Yeah.
And I think, the team had done a great job of that.
Yeah.
Well before I even got there.
Right.
in some markets that you traditionally might not have thought would have been a good story,
Yeah.
like California.
Right.
When they did that, I don't think that was the traditional path out of Alberta.
That was counterintuitive at that point. Yeah.
Yeah, because everyone's going to Dawn and Chicago. Those were positive basis markets.
Yeah.
But I think Sharon...
And even just to take the view that this is an attractive market for a while still, despite what everybody was saying about renewable built out, et cetera.
Yeah, like that's a declining demand story.
Yeah.
And I mean, I guess like demand's like flat-ish. It hasn't been growing per se, but the supply's been shrinking.
Yeah.
And then I think the big thing, chatting with Shara, this was like, I think the marketing story started around 2014, where they kind of, I think back then you could see the pools of FTR available in Alberta. So you could see the percentage that had already been taken out. Then you could back into how much potential production there was.
Yeah.
And that was kind of like a light bulb moment that like, okay, like we need to look at moving our gas outside of the basin.
Yeah.
So they started with, I think, an AMA down to Chicago, took us some T-South, and then their California position was like 100 million, which, as I mentioned, was not like the conventional story, but I think their big takeaway is the East was going to be dominated by Marcellus.
Yep.
And so they wanted to position their gas at a market that was going to be served almost solely by the WCSB.
Yeah. Yeah. There was no world where you were going to build a bunch of pipe from the Permian into California. Yeah.
Yeah. No chance. Yeah.
What is your most unusual habit in your daily routine?
I mean, like I said, I do like wake up at 3 a.m. and check NYMEX.
Okay. Which
there's nothing I can do about it. But I think that goes back to my days at TransAlta.
It's just hardwired.
Yeah, exactly.
That's funny.
I do find a lot of value sometimes going on Twitter and like seeing a lot of like real-time information. I don't think that's an unusual habit. I think a lot of people in the industry use Twitter as a resource.
Yeah.
Yeah. I don't know. I guess I'm pretty boring.
Yeah, there you go. And what's the one piece of fundamental data that you need to trade? Like if you didn't have this one thing, you couldn't press the button.
Like modeling?
Yep, could be modeling. Yeah.
I mean, for us, our ACO modeling is key. Understanding what the balances look like.
Yeah.
It's not really on the short-term side, but like our long-term hedging program relies on our understanding of the fundamentals 1, 2, 3, 4 years out. I mean, we're looking out 10 to 15 years, but that's probably the most, and we have a lot of good data. Obviously, we are the biggest producer in Canada, so we have a handle on the production side of things.
Yeah.
So I think that's the most important piece of information that we use on a regular basis. And we have modeling built out for all of our regional hubs, but Alberta is definitely the one that we rely on the most.
And what aspect of natural gas markets do you think is least understood by kind of the typical oil and gas producer? So obviously there's a few sophisticated groups out there, but kind of the median group, what do you think is least understood?
On the E&P side, I think maybe the value of storage in ways, because we've grown the basin, not just the basin, but I guess we've grown North American production, even since I've been at Tourmaline, from like 75 BCF a day to 100, 105.
Yeah.
Demand has gone lockstep with supply, and we haven't really grown storage.
Right.
In fact, in some areas, it's declining. And I think that's creating a lot of volatility in the summer-winter spreads. And we've seen that in California. When we first took out storage there, those spreads were like 30 cents. And now those spreads are $3.
Right.
So I think in your world, like sophisticated traders and marketers, they understand that stuff inside and out.
Yeah.
I don't know how close like the average producer is watching that. And then I think maybe bigger than that is the impact on the power side for natural gas.
Right.
Especially in North America, it's kind of like the last growth area or constructive growth story. You got the AI demand story. Coal to gas switching has been huge. The impact of renewable growth on natural gas and where it's dispatched in the curve.
Yeah.
Just because renewable growth, we've gone from 20% to maybe 30% of the North American generation stack. And gas hasn't necessarily shrunk per se because coal has been declining.
Yeah.
But the power demand story keeps appreciating. Like I think we averaged 5% annual growth on the power side over the last decade, where maybe you would expect that to be declining just because of the overwhelming renewable story
Right.
in the public space.
Yeah, and I think that's not widely intuited that it entrenches a bunch of peaking gas
No,
to keep the
definitely
lights
not.
on. Yeah.
Yeah. Yeah. So I think actually, which is a benefit coming from TransAlta,
Yeah.
obviously, because I think power has been a lot more important than I realized it would be moving over to the gas side.
Right.
And we've done, gas to power deals in Alberta where we basically lock in fixed heat rate. We mentioned this in our Q2 report
Mhm.
in 2023, and we realized, I think, a gas price of $7.07 in 2023
Right.
versus AECO settling $2.50.
Yeah.
So obviously ISO is a very volatile market.
It is. Yeah.
And we benefited from that. So yeah, I think maybe power is probably a more misunderstood story for gas
Yep.
than even storage.
Yeah. It just functions so differently. Yeah.
Yeah.
Have your best trades in the past come from intuition or from rigorous analysis?
I think actually intuition. I have some memories of doing a ton of analysis and the trade moving against me. And maybe because I was so convicted, because my analysis was so, I felt that my analysis was spot on, that, this is the way the market has to move.
Yeah.
And it just didn't go that way. And I remember one of my old bosses, and you probably heard this over your years too, is like whenever you have a losing trade, you're paying a tuition.
Yeah.
So you're learning a lesson.
Yeah.
And that was definitely a lesson that I learned.
The lesson was less analysis.
Yeah, well, maybe not. Maybe just to not be overly convicted just because you think you've got the analysis nailed. And what I did learn from that is you can have all the analysis right, but your timing can be horrible.
Mm-hmm.
And
Yeah.
you might be right in the long term.
Yeah.
We had a view at TA, SoCal Permian view, this was back in 2016,
Yeah.
that we thought those spreads could potentially blow out.
Yeah.
And I think that view is proved correct,
Yeah.
especially when we saw Permian trade minus $8. Obviously, it's an oil and liquids play.
Yeah.
But the timing of that, it wasn't a losing trade per se, but it just didn't, it would have been better timed 2-3 years into the future.
Right. Right. And do you think that intuition can be trained, or do you think just some people have it?
I think intuition comes with a lot of experience. I think you gotta fail early and fail often, pay that tuition to kind of understand.
Pay what you can afford.
Yeah, pay what you can afford. That's true too. Capital allocation, risk management is key.
Yeah.
I think some people obviously do have a natural talent for it.
Yeah.
I mean, I've seen that. I don't particularly think that I'm one of those people, but working with enough people on the trading side at TransAlta, you see some guys that you don't know how they do it necessarily, but year in, year out, they're making a lot of money, and they just have a feel for the market.
Yeah.
And I think it's almost intangible. You can't really put your finger on it.
Yeah.
I have to do a lot of analysis, which sometimes didn't work.
What's the craziest price action you ever witnessed on screen?
It's going to be stuff at Tourmaline for sure, because we've had some very volatile periods of time.
Yeah.
I think it's probably California.
Yeah.
I mean, JKM was crazy in 2022 with, obviously, the market was already tightening in 2021. I think you could see the coal pricing in Europe was escalating, and gas didn't really have to compete with the coal and the carbon ledge.
Mm-hmm.
And then all of a sudden, they lost some supply. They had some surprises on the demand side, and they started competing. And it was like they had to basically ratchet up $10, $15 to kind of get competitive with that coal ledge in case they had to price off some demand. And then obviously you throw in the conflict in Ukraine, and that was kind of your black swan event. And you saw some very high pricing, not just in the dailies. You see that a lot. You can see, I've seen Sumis trade $200 in cash.
Yeah.
I think we've seen that in Chicago. But JKM forward curve was trading $50. It was trading at WTI price, and it was gas.
Yeah.
That was crazy. But California was interesting in 2022 as well, because you kind of had a number of very bullish events line up at the same time. It was a really dry year. It was a drought year in California. We saw some declines in storage capacity. And then you had a very, very cold winter. And we started pulling on storage hard very quickly.
Yeah.
And so I remember it was December, right around Christmas time, we started trading. I think we traded as high as $90 in cash. and the forward curve started to make moves as well, which you don't typically see in North America, I find. AGT, those kind of markets, you can see it, but I never seen it in California before. And we have a storage position there, which obviously did very well for us as well.
Right.
So it would be a combination of like the JCAM move was pretty monumental, but I just, for some reason, it sticks in my head. The California price, like $40, $50, actually trading higher than JCAM in cash over that Christmas period in a market that I would kind of expect not to do that.
Yeah.
But there was a rationale behind it. I think we were trying to price off industrial demand to balance the market because we were at that point.
Right.
So,
kind of going back to the intuition piece, was there a trade that you made where the outcome was so obvious to you that you could kind of like feel it, like go through your veins? And describe what that feeling is when you just feel like you're right on something.
It's weird. I don't really look at Tourmaline as trading. We're managing a huge asset. We're portfolio managers.
Yeah.
But that being said, I still get the rush of making a good call.
Yeah.
And I think our hedge program for 2024 was a really good call in hindsight.
Yeah.
We kind of saw the writing on the wall for 24. You could see that we were starting at a relatively low level in storage going into 23, but we were filling very quickly, like quicker than maybe one of the fastest or strongest injection summers we'd seen in over a decade. But we started such a low spot that we were never at risk of filling. So I think the market kind of discounted that. But we were seeing that like if we were to do this again, and if you just assume like normal production growth, like we're going to blow through storage in 2024.
Yeah.
And we kind of had that view in 2022. And we obviously hedged like a BCF a day of gas
Right.
across 22 and 23.
Yeah.
And I mean, it's a great feeling too. And it's a lot easier to do it at Tourmaline because we have a huge gas position.
Yeah.
So it's not speculative. We're locking in value.
Yeah.
But, it still feels really good when you look back and you're like this summer, for example, we have hedges at like $3.90 and AECO settled 90 cents cap per GJ.
Yeah.
It's a lot of value that allows us hopefully to helps with, M&A. We paid us another special dividend, I guess, last week, 50 cents,
Yeah.
which we usually allocate special dividends for, I think we word it as accommodative commodity environments.
Yeah.
But 90 cents cap per GJ isn't that accommodative, but our weighted average price was $3.19. So
Yeah.
I think, that's a story that I feel good about.
Yeah. Yeah. So yeah, it's almost like you're doing that to tell the story a little bit more about what's going on here.
Yeah.
When you have a series of bad trading days, and you start to feel like you know nothing. I think we've all gone through this.
Yeah.
What's your process to regain confidence and get back in the market and kind of remind yourself that you have a sustainable skill here?
Yeah, I think I'd take, like in the TransAlta days, I would take a break from, I'd still be trading, but I would take a break from big positions and I'd just go back to the analytics, to be honest. Be like, I must be missing something here. What I do like about trading is there's a creative element to it. In what ways can I look at the market that maybe someone else isn't that can provide me an advantage or an opportunity?
Yeah.
So I would kind of like go back to that, like, okay, what else can I be looking at here to build a better position for next time?
Yeah.
And we had some really like solid people at TransAlta, especially on like the programming side. We had a guy that built a ton of, like I am not good at programming. So Python and Java, wouldn't even know the first thing about it.
Yeah.
But I was able to work with him and bring him ideas to reality.
Right.
And I think we built a lot of cool tools that way that it kind of allowed me to reset and then go forward.
And that's a skill in itself too, right? Like the idea of what you want to model.
Yeah, I'd like to think so.
It's true. Yeah. How do you think about a methodology for sizing a position? I think it's probably a little bit different in your current role where you just like this is the number, we gotta figure out what to do here. But like in more of like a spec setting, how do you think about that?
Yeah, I mean, how I manage it personally, because I still have that trading mindset. So I have everything built out for my personal finances on a spreadsheet that has my percentage in sector, percentage in each stock as a total of my in my portfolio.
Yeah.
And I think I'm probably in a way, I wouldn't say I'm completely risk averse, but I never want to put myself in a position where like one trade can completely blow me up. Like that's not a comfortable place to be. Probably been there when I was a lot younger. You learn the lesson: fail early, fail often.
Yeah.
So I think, which is why I think Tourmaline kind of works well for my mindset. I think I'm better in a role that I'm managing a big portfolio, and we're locking in value, and then it just comes down to how much percentage we want to lock in.
Yeah.
If that makes sense.
Yep. When a trade goes against you, how do you decide whether just to hold on, stop out, or add more?
Yeah, that's tough, I find, because I feel like oftentimes you hold on to your losers longer than, at least I do,
Yeah.
than you hold on to your winners. Like sometimes you naturally want to take profit off the table. And I think that's what makes some traders very, very good, is they are willing to cut their losses very quickly when something moves against them.
Yeah.
And they have a value in their head of where something should be, and they're willing to sit there and hold it.
Yeah.
Have you ever read that book, Market Wizards?
No.
One of my favorite books to read, because it's like interview with top traders. So you go through, I can't remember how many guys are in the book, but really well-known traders.
Yeah.
And they all kind of have like similar mindsets, just worded differently. And then one of the big ones is like, cut a position. The second you don't feel good about it, just cut your losses and get out. And then, knowing when to hold on to your winners. I think that takes experience though and time. I think I've gotten better with that over the years.
I think the human body has got some intelligence here too, that you often feel it.
Yeah, that's fair.
You feel like there's a natural discomfort.
Yeah.
And sometimes it's not necessarily articulated through what the number of the loss is. So you could have a situation where you're down X and you're feeling okay, or a situation where you're down X and you actually feel really uncomfortable or starting to feel uncomfortable.
Yeah.
And I think oftentimes it's hard to react in that moment, but your body often tells you. Especially
sometimes in commodity markets too. I'm not sure on the power side, but like liquidity can be a real issue as well.
Yeah.
So a position might be moving against you, but to take it off might cost you another X amount. So that's another human emotion thing. It's like, well, I could let it ride and maybe it's going to come back in my direction.
Yeah.
Or I could cut my losses, but eat even more.
It's a different thing psychologically to see what's on the screen, to see, because you can naturally kind of get into a false sense of security if it looks like there's liquidity there.
Yeah.
Even though your body's trying to tell you, actually, no, like this is not good.
Yeah.
I think the really experienced traders immediately take that opportunity.
Right.
And don't wait until, okay, well, if the market still thinks it's bid, like, okay, I'll just hang around for a little bit longer.
Yeah.
And then until it's not.
Yeah, totally. Yeah, it's like, that's another, I guess, an intangible of a good trader is they can feel the market out in the direction it's going.
Yeah.
And they can almost feel the exact point when it's starting to, like the peak starting to taper off, I guess, start to take that value off the table.
Going through all the bloody lessons, the tuition paid, what's something that you wish you knew earlier in your career?
It's a good question. I'm just trying to think exactly what that would be. I feel like it was a lot of like slow learnings. I mean, I got thrown into the deep end, I guess, pretty early at TransAlta.
Yeah.
Honestly, like I've learned so much at Tourmaline on the operational side of things that was a huge blind spot for me at TransAlta, which I definitely impacted my ability to understand where the market was going to move.
Okay.
And so understanding the upstream side, understanding, the break-evens by play, what tier 1 inventory means versus tier 2, like the drilling, all that kind of stuff, that wasn't really on my radar back in the TransAlta days. Also a lot younger.
Yeah. But meanwhile, still trading the same products. And
right. That would have been hugely valuable. Understanding, like...
Do you think you could have got that knowledge just with what's publicly available? Or you had to be... No, you could have got that.
I think so.
Yeah.
Yeah. Like, I mean, a lot of the analysis we do at Tourmaline is all with public data.
Right.
Like, we build a producer guidance model where we kind of look at the break-evens for each producer. You can see that for the most part in their investor decks. Get a feel for their hedging, how hedged they are. I mean, this year's a prime example. A lot of producers were really well hedged this summer. And then the break-evens have dropped because a lot of these big producers have become liquids players, which drives down their op cost. So you could kind of see that, what would trigger economic curtailments 4 or 5 years ago might have to be lower now, right? And I think this summer might be one of the lowest settles for AECO since at least I've been in the industry.
Yeah.
And I think that has a lot to do with a couple of things. LNG Canada, so you see a lot of these LNG Canada players growing into an uneconomic environment because they've got to be ready for LNG Canada,
That's
which
right.
should be next year.
Just
Yeah.
flip of a switch. Yeah.
Right. And then also I think break-evens have come off. So that's something I didn't really look at as closely at TransAlta, which you definitely should be, which I wish I knew back then. But it all kind of played out, I guess, how I would hope it would. I'm happy where I am now. So
So just a more of an emphasis on learning the fundamentals of a particular market.
Yeah.
As well as you can.
Yeah, I was just very focused on downstream spreads and weather and regional modeling, like storage, things like that, which is obviously valuable.
Yeah.
And I'd like to think I brought that over to Tourmaline.
Yeah.
But the upstream side is obviously hugely important.
Yeah.
You got a huge gas producer that is very economic at $4, and they're about to bring on a huge hedging program.
Yeah.
That's obviously going to put a cap on pricing.
Yeah. For someone who's listening, who's interested in trading, getting into trading, what do you think are a couple skills they can work on to make it into the field?
I think you have to be pretty resilient. You have to be pretty comfortable in uncomfortable places, like riding your emotions.
Yeah.
I don't think it's for everyone. Going back to what you said about there's intangibles that make a trader really good. I think some of the best traders are guys that manage
Psychopaths?
Maybe. Yeah, that's why I'm a horrible trader. I'm just a good guy. But it is about riding your emotions for sure. That's a huge part of it. But I mean, a lot of that you kind of learn on the job.
Yeah.
I think wherever possible, if you're interested in it, knock on as many doors as you can of people in that space, learn as much as you possibly can as early as you can. Something that I wish I did maybe back in the day is ask a lot of dumb questions, because I think you find a lot of those questions aren't actually dumb in the sense that the beginning, you're not expected to know anything.
Yeah.
Especially like I said to you, electricity trading, I didn't even know it existed until I stepped foot on the TransAlta trade floor, basically. So there's a lot of stuff I didn't know. But I think when you're younger, maybe you naturally don't want to ask a question that will make you look stupid.
Yep.
Which I find is never the case. And then there comes a time.
You only look stupid if you're asking for the third time, really.
Right.
Yeah.
And then it becomes tougher to ask those questions if you're 10 years into the industry, right? So
ask as many up front, when there's no expectations.
Yeah, so I really like when young people are not afraid to ask those questions, because I think you learn so much that way.
Yeah.
I feel like I'm better at that now almost, that if there's a blind spot that I have, I'm going to ask the question, because I'd rather just know the answer than just sit there and never find out.
Yeah. How many hours a day do you think a young trader needs to spend to make it?
Are you talking 10,000 hours?
Well, no,
Gladwell?
Maybe, or just hours a week. What's your view on how hard you have to grind to make it in this market?
Yeah, I mean, I think this is true to anything. I think if you aren't enjoying the work, it's going to be really tough to be successful at it.
Yeah.
So if it's feeling like a complete grind, then it's going to be really tough to excel. So I think the first thing is, pursue something that you really enjoy doing. And I really enjoy trading. So it doesn't always feel like work. I remember there's some guys on the desk at TransAlta that I remember one guy in particular, he would be going home and he would be modeling at home until 10, 11 p.m. Because he just loved doing it. It was his hobby.
Yeah.
And I also really enjoy doing it.
Yeah.
I mean, I'm not modeling till 11 p.m. I'll admit. But I enjoy.
It's on your mind.
Yeah, I mean, I think it's exciting. It's fun. The energy market moves the planet.
Yeah.
So you got to keep track on a lot of different things.
Yeah.
So I find that really interesting.
Yeah.
So I think you can put a lot of hours in without realizing you're putting hours in if you enjoy it. But I think anything, the more time you put in, the more likely you are to be successful.
Yeah. Last question, probably the most important. Has trading made you a better golfer?
No. I don't think anything will make me a better golfer. I'm very happy at the level I'm at.
Okay.
I'm not great. I'm not bad. I enjoy it. Occasionally I can shoot a score that I'm really happy with. My son's ruined my golf game because I can't play as much anymore, but I won't hold it against him. The industry does sometimes gets me out on the golf course, which is nice. So I guess in a way, maybe.
Yeah.
Probably play more golf than I would have otherwise.
Yeah. I like it.
Yeah.
Well, thanks for taking the time.
Yeah. Thanks for having me.
This is great.
Yeah. Appreciate it.
Thank you for joining us for this episode of Energy Untold. Energy Untold is produced by Shortline Creative and recorded at GBE Energy. Art is curated with the assistance of Norbert Hall. For more information on the show, visit energyuntold.com. We would love your feedback. Send us a message at hello@energyuntold.com. Thank you again, and until next time, I am Corey Paddock.